Welcome to the Predictive Model. My name is Evan Scales, the creator of this software. In this video, we're going to do two things. Number one, we're going to talk about all the features and the definitions of those features so you know exactly what you're seeing on your chart. The second thing will be what types of trades you're looking for so you can use this model the best way possible and hopefully make the most money you can and lose the least amount of trades possible. All right, so let's get into it. So I'm going to shrink my face here, bring it down to normal size, and we will get into it. Perfect example right here of an ideal trade. We'll talk about that in just a second. So you have your model on your chart. You've added it. You go to indicators. You go to invite only. If it doesn't show up, but I told you I added it, log out, log back in. It will be there. Invite only. You look for the predictive model right here. Boom. You'll add it, and you'll be on your way. Okay. So when you get with the model, there are a few things that you need to know first before you can start taking some trades. One is what this is. This is the channel. If you're with me on my live streams, which we go live every day at 9 a.m., 30 minutes after the market opens Central. This is the channel. I refer to this as the channel, okay? And essentially, we don't want to take trades inside the channel. This is a no trade zone, okay, for the most part. Once you get more advanced, you can start trading inside the channel. We'll talk about how to do that in just a moment. But this is the channel. We don't want to take trades inside of it, but I'm looking at this, and this is the average range of price over a given set of candles. So price wants to be inside the channel. It does. And we'll talk about how to trade that way in just a moment, but this is the channel. The second thing that might catch your eye is this piece right here, these circles. This is a trend identification software. So we're not looking for longs and shorts or longs and shorts. We're looking for binary, is this a trend or is this not a trend? When it's blue, we have a trend. When it's red, no trend. Blue, trend, red, no trend. And you'll see this continue on and on and on. This thing does a really good job. It's been very fine-tuned to catch the best trends so that when it turns blue, you know that you're looking at probably a really good move that you could take and hopefully make some money on, assuming your entry and everything else is accurate, okay? So when this is red, no trades. When it's blue, you trade, okay? Very easy to understand. That is simply a trend identification software itself. The next thing, the most important thing here, are going to be these three boxes or these three labels and these three boxes. So you have, this is the prediction. This is what the predictive model was built off of. Everything else helps you see it clearer. You have a sell here label, you have a take profit label, and you have a stop loss label. So we're in a nice downtrend trend here. You can see the prices have been falling around outside the channel. Okay. The sell here, I call this the sell zone. That is always going to be if we're looking for a short above price. I want to see price reverse up, then we sell, then it comes down to our take profit. That is an ideal trade, okay? We have a trend that we have right here. We have price pull up, okay? And then it drops down to our take profit. This candle right here was a perfect example of that. We were just shy of the sell zone, but it completely nailed it. Got up close, hit our take profit. You can do the same thing here, okay? But we want to enter when it's ugly. So if you're looking for a long trade, you want to enter when the candle's red, enter the trade, and then ideally it goes green on you. You got some profit, you got some built-in market edge. We want to wait for these pullbacks because that's going to keep our trades safe. Think about it this way. If you get into a sell right here, you have no edge. You have to hope price keeps going down, which it might. But you don't have any advantage over the market. Versus had you entered up here, okay, even if price reversed on you, if it reverses 5 points, that's not detrimental because you could still see this thing coming down. But if you enter down here with no market edge and it reverses back up, you get wiped out. So waiting for a reversal will make you patient. But what it's also going to do, and you would have been profitable, it just would have been really ugly at times. What it's also going to do is make sure that you're getting in your trades at the right time. Okay, so I really want you guys to focus on entries because that's what this system is made for. But we want to wait for pullbacks first. Okay, then we have to take profit. Now, when price pulls back, hits our sell zone, and then it leaves, ideally, you may hold to the take profit zone, or you can hold for any other amount of money that you're hoping for. That's just there to kind of show you like, okay, this is kind of the average range of price. So we're likely to hit this thing more than we're not, as long as it's a real trend. But you can kind of ignore it if you want to and hold for trades that are winning huge, which I do often. You can see that on my live streams. But I would say the most important part of this thing is the sell zone. We want to wait for these pullbacks, let price come back to us first. Then we get into that trade. Let me show you on this candle right here. I think we have a good example of it. And if we don't, I'll show you on the next candle or another candle. Okay, so we had price almost get to our zone. Now, it doesn't have to get all the way in. And if you want to enter a little bit higher, you certainly could. So give it some room for error, okay? But this is exactly what we're looking for. Price pops up, we sell, price races down. And then had you held, okay, it would have kept going for you and you'd be printing cash on this move right here. Okay, but very similar to this move right here. Price pushed up, and then it got to our take profit, and now it's reversing back up. So now I got to see what's going to happen with this candle here. Okay, but that's how you use these labels. Okay, right here, labels and then the boxes. All right, that makes sense. If it doesn't, make a comment or send me an email or a message, and we'll talk about it. The next thing you'll see, probably the most prevalent, is going to be the rejection labels. Now, there are a lot on your chart, and that's for good reason. Not going to trade off of these by themselves, but this is price action support and resistance. What this is, we're looking at where are buyers and sellers stepping into the market. When you see a red rejection, we've got red, so sellers stepping in and pushing price down. And then we have these green tabs, we've got buyers stepping in and pushing price up or trying to, okay? Get a buy tab right here, potentially. Trying to see if buyers will step in and push price back up. But that's how you read these. Sellers step in, reject price, and push it down. Buyers step in, reject price going down, and push it back up. Back and forth, they go all day. Now you have this table here. And what this table reads is how many candles on average, including a rejection label, occur in that same direction. So, said differently, every time I get a red rejection label, I'm averaging 4 candles, which this is the most recent one, and we've just been shooting down ever since. So every time I see one of these, I'm getting 4 candles in a row. That's quite large. Every time I get a green tab, I'm getting about 1.3. I'm getting basically 1 candle. The rejection, the green candle and this green rejection are included in this. So this is 1. This counts as 1, okay? And then if there was a red label that comes here, this would count as 1. And so if it's 1.5 or greater, you're averaging almost 2. And then if it's 1.49 or lower, then you're averaging closer to 1. But you can use this table to start to see, okay, I see where price is, I see what's going on, and then here's the data that kind of supports maybe what I could see next. And so you're looking at some of these rejections thinking, okay, if I get a red up here, I'm probably averaging 2 candles. Rejection, pullback, sell, pretty good. So you can use the labels to trade support and resistance if that's the way you want to trade. I trade like this often as well. So I kind of merge 2 systems into one. So you can trade if you want to trade trends, wait for price to get outside the channel. Look at that. If you want to trade these rejection labels, you certainly can. You've got some data there to support it. Okay, so that is all of the features that come with this thing. And by the way, almost another perfect pullback into our zone, okay? And then price jumps down. Perfect, beautiful, every time. That's what we want, every time. Pull back, enter when it's green to go short. Hopefully it counter turns red. Very nice. Okay, now that is the definitions and features that come with this thing. Okay, square, great. Let's move on to how and what types of trades we want to be taking. The type of trades we want to take are these. This is beautiful. This is artwork, okay? Now, when you're new to this system, maybe you're a newer trader or you have experience, but you want to get yourself into a consistent process that works more times than it doesn't, then what you'll want to do is 2 things. 1, wait for price to leave the channel. Okay, the channel up here, wait for price to leave it. Close outside of it. It needs to close outside of it. And make sure that you have some green circles here, which you can change to any symbol you want. Okay, so outside the channel, a blue, green dot, then I'm ready to take a trade. Wait for pullback, enter the trade. Okay, and then while this is blue, while price is outside the channel, you're just waiting for these pullback. Wait for pullback, enter. Wait for pullback, enter. Wait for pullback, enter. Wait for pullback, enter. That's what you're looking for. Okay, that's on the downside. On the upside, it's the same thing. Okay, price leaves the channel, great. So this one would have been kind of a dud, but then we get this pullback right here, perfect, price launches. Okay, and same old, all the way through. Same thing here, pullback, go. Nothing there, nothing there. Price is kind of flat. Price comes down, pullback, go. I took a trade on this one actually. I took a live trade on this candle right here. Maybe I can enter that or put that in somewhere. But really good trade right here. Price pulled back into our channel, boom, rushed out. So really, really good. Let me see if I can show you that really quick actually. Let me see if it flashes green like it might. Nope, it didn't at all. Maybe I'll try to put in the try to put that trade into this. We'll see if I can find that and do that. Okay. But anyway, that is one set of trades that you can take, which are trend. The market's moving big one way or the other. We don't care. We're traders. We just want to be on the right side of these trades. So price outside the channel, great. Wait for pullback, enter that trade. Let's go. Now, let's say price is not trending and we're flat or choppy. Well, you can trade ranges too. And that's what these rejection labels are for. And so what we want to start doing is going to be a little bit more difficult, but we want to find places where price is rejected consistently. And then we need to use our table to find out if we have historic data of price moving a certain amount of times after a rejection. And so here's two really good options right here as well. Okay. Now I told you there are three setups. I'm gonna give you the two main ones, and I'll give you a third one here. It's a bonus. Price rejects up here once, pulls back. Okay, then price rolls up. Then price rejects here again. So they're kind of the same zone, and then price gets lower. This would be a perfect trade for us. We're inside the channel, but we're trading choppiness, not necessarily trend here. Price gets up here and we sell. Great. So we don't take that one because we want to see if it does it again. Then it does it again. Wick, wick, wick. Sell right here. Boom. Price moves for us really nicely. But then we get price to kind of hold down here again. So price holds here and pops. Then it holds here again and pops. Pull back and go. Pull back and go. And then we get this massive candle right here as well. Okay. So you can trade these labels, in real time. Let me see if I can go back and show you this. You'll have the ability. So let's just consider this candle our start. Okay. And we're going to get this red candle right here. And now rejection label will show up. And we get this, it says 1.9 on our streak, 1.9 candles, which means I'm averaging about 2, which means I can probably look for a pullback and then go short right here. And that would have been very profitable. Now it happens to move a little bit further. Okay, and we get this massive move right here. Then we get this green candle that happens in just a moment right here. Okay, now this candle happens. So now we have a rejection. And now we're looking at 1.3. So I'm not eager for this trade just yet. But then that's at 1.4 maybe. So maybe this is a trade I could take. Pull back again. And then maybe this is another move I could look at as well. Okay, so we have the rejection label, a pullback, good trade. But we're looking for similar areas of rejection on price that we can use. Okay, now price is just falling off a cliff right now. This is outstanding. I love this. Okay, so that's two ways of trading. Trading the trend, which is price pulls outside the channel and races up or races down, like we're seeing right now, racing down. Then you also have, and this is oh my God, it's a perfect example. Boom, price hits our sell zone, rolls out, take profit. Every time, every time. We can get that 2-3 times a day. Okay, now that's the best way to trade. The other way is looking at the rejection labels and trying to find support and resistance and figuring out where price wants to settle and where it wants to reject from, and then take those trades. The third way, and this is where you're going to catch some really explosive trades, they'll just happen really fast, is price leaving the channel and then re-entering the channel. Okay, so here is an example of that right here. It doesn't look very much, but this was a massive move at the time. So price makes this big push down, huge push, right? Pushes down. Then it holds right here. Then we get price to pull back. This was a nice, easy trade to launch back inside the channel. And this trade, to give you some context from top to bottom, was 30 points. Okay, 30-point move. And if you're trading 2 contracts at $600, or 1 contract at $600, 2 contracts, 1,200. Keep doing the math. So really nice move. When price exits the channel, it will fight to get back in. It might trend, but it will fight. Here is another great example of that. Price pushes up, rejection label, and it closes red. Price wants to get back into the channel, and it immediately races down to the bottom, and then it pulls back a little bit, and then we get this rejection back and forth, back and forth. But we get price to pull outside the channel. When that happens, we're going to get a violent response back inside the channel. Here's another one. Outside, okay, price races, holds, rejection label right here, pullback into the channel. Next candle, same thing, into the channel. These moves are really profitable to take. So when price is outside the channel, it's very much extended. Think of it like overbought, oversold. Think about it like a Bollinger Band even. When price is outside that channel, okay, we're looking for 2 things. Price to continue its trend or for it to reverse back up. And for you to know that it's going to reverse back up, just wait for a rejection label. And then you're probably going to get that very next candle to erupt in your favor. May or may not, but I can't guarantee anything because there's no guarantees in trading. Let me just say that. But when you get a bottom rejection label like this, we want to see price get back inside the channel. That's going to be a very quick and fast move. Okay. Same thing happens right here. Outside the channel a little bit. We try to go lower. We can't. Boom. Race back inside. And then we go to the top actually. And we reject a little bit. Reject again. Okay. So those are the 3 trading styles that we want to utilize. Price closes outside the channel. Wait for a pullback. Enter the trade. That's 1. Second is we see support and resistance via rejection labels, and we find common places where price has been rejecting, and then we're able to take those trades as they come. The third is going to be when price is outside the channel, okay? And it's beginning to reverse back up into the channel. Those trades are going to happen very fast. And so that is a third way that you can take trades. So with those 3 ways of trading, you will have no shortage of trades that you could possibly take. What's going to come down to is your discipline, okay, and your practice of using the system. Don't take 2 or 3 trades and then you got it figured out. Take a ton of trades and get the reps in. You have a 7-day free trial. Make sure that you actually use it. But this is the predictive model. This is what I use to get payouts. This is what I use to pass these evals. This is what I use when I live trade every single day. This is all that I use. I might throw a view app on the chart every once in a while. I use nothing else. No higher time frames, nothing, just this. So happy to have all you guys here. If you're watching, make sure you like and subscribe. But until then, I will see you in the next video and we will go from there. Peace.